The Intelligent Investor by Benjamin Graham. Hello, and welcome to this podcast on the top 10 lessons learned from the book The Intelligent Investor by Benjamin Graham. Benjamin Graham, widely regarded as the father of value investing, published this book in 1949, and it remains a must-read classic for investors to this day. In this podcast, we'll take a close look at the book's lessons and how they apply to investing today. We'll cover topics like the importance of margin of safety, the different types of stocks and bonds, and much more. So let's begin. Lesson 1, the margin of safety. The margin of safety is the most important concept in Graham's philosophy. It involves buying securities at a price below their intrinsic value, so that if the value of the asset falls, the investor still has a cushion of safety. The margin of safety is not just about protecting against losses, it's also about enhancing returns in the long run. Lesson 2, value investing. Value investing involves buying stocks that are undervalued according to their intrinsic value. This is in contrast to growth investing, which involves investing in companies with high growth potential. Graham believed that value investing was the more reliable approach, as it was based on fundamental analysis and not speculation. Lesson 3, the Mr. Market analogy. Graham used the analogy of Mr. Market to explain the irrationality of the stock market. Mr. Market is a fictional character who offers to buy or sell a stock at a certain price every day. Some days he's in a good mood and offers high prices, while other days he's in a bad mood and offers low prices. Graham's point was that investors should ignore Mr. Market's daily whims and focus on the intrinsic value of the stock. Lesson 4, diversification. Diversification is an important risk management tool. Graham recommended investing in a mix of stocks and bonds to spread risk. He also recommended diversifying within each asset class so that a single stock or bond does not represent too large a portion of the portfolio. Lesson 5, the different types of stocks. Graham classified stocks into two categories, defensive and enterprising. Defensive stocks are from well-established companies that have a history of stable earnings and dividends. Enterprising stocks are from newer companies with growth potential. Graham recommended a combination of the two for a balanced portfolio. Lesson 6, the different types of bonds. Bonds are classified into two categories, investment grade and speculative grade. Investment grade bonds are from reputable issuers and have a low risk of default. Speculative grade bonds are from companies with a high risk of default. Graham recommended investing primarily in investment grade bonds. Lesson 7, long-term investing. Graham believed that long-term investing was the key to success. He recommended investing for at least 5 years, and preferably 10 or more. This allows the investor to ride out short-term volatility and focus on the long-term growth potential of the investment. Lesson 8, the importance of fundamental analysis. Graham believed that fundamental analysis was the most important aspect of investing. This involves analyzing a company's financial statements, management, competitive position, and other relevant factors to determine its intrinsic value. Graham believed that this was the best way to identify undervalued stocks and bonds. Lesson 9, the downside of emotions. Graham warned against the dangers of emotional investing. Fear and greed can lead investors to make hasty decisions that are not in their best interest. It's important to remain rational and disciplined when making investment decisions. Lesson 10, do your own research. Finally, Graham believed that investors should do their own research and come to their own conclusions. Following the advice of brokers or analysts without doing your own due diligence can lead to poor investment decisions. Investors should be independent thinkers and ask tough questions before committing to any investment. That brings us to the end of this podcast on the top 10 lessons learned from The Intelligent Investor by Benjamin Graham. We've covered a lot of ground, from the importance of the margin of safety and value investing to the different types of stocks and bonds and the dangers of emotional investing. We hope that these lessons will help you become a more successful and thoughtful investor. Thanks for listening.